All right, welcome everyone to another Santiment This Week in Crypto. Today is January 19th, and we've got a lot to discuss after prices have slid fairly substantially over the past week. We're joined here by our founder, Maxim, and Maxim is going to talk about a few key metrics that he's been watching over the past week. And let's see what we can gather on this stream in terms of future price movement, where markets currently stand, and what we have in store going into the final stretch here of January. And of course, the halving coming up in a few months, plenty of other good events. But Brother Max, why don't you take it away and we'll go from there.
Yeah. Hi, Brian. Hi, everyone. I will keep it short. Good for you and good for me too. I'm now in Asian time, so it's quite late here. And the things are, I don't know if it's already on the screen, what you see is the chat here. That last week I could not because I was moving to Asia, and actually I remember I shared with you, Brian, shortly that the things, how it looked like. Bitcoin unlikely can make any movements high. Maybe it will go lower or stay in the range, but Ethereum can. It was more like intuitive or like based on everything I observe, and I will share now a few things I'm observing. But you know, when you try to make things shorter just from top of your head, sometimes it's don't think much. Trust your experience, intuition. This is more or less what happened. If taken into consideration what was considered and actually de facto was main driving force for Bitcoin, it was ETF. This is what you see on the screen. Now we have this social tool where you can specify criteria, and you will start or we parse for you all social volume we collect from relevant or only crypto channels, be it Telegram, as you can see, Reddit, Twitter, everything, onchain. And we show you this specific narrative ETF, how much is it dominant, or what is percentage of conversation to it in the whole crypto space. Now, what you can see on this chart is very interesting and very important. And this is one of the key patterns we keep observing. And of course, there is no crystal ball, but this one works in many, many cases. When some narrative starting to take over, you will see two things: price keep increasing, and every time price jumps, social dominance jumps, and it keeps growing for a very long period of time. And it's especially clear with some trending tokens like meme coins, be it, I don't know, Bomb, Pepe, Doge, whatever you take. But you take social dominance because you want to see how much attention of the crowd, of all participants dedicated to this specific topic, which is relevant for mostly for coins, and ETF is about Bitcoin. And it goes healthy, price goes up, dominance, people talk more and more and more. Yeah, you know, we get reiterated that it's a cool thing to be, and suddenly at some point of time, all breaks or all barriers fall down. Everyone convinced this is a cool thing, and then you see this was the moment when ETF was accepted. You see huge spike, yeah. Huge spike of dominance. I think at the peak it was here 13.5. Yeah, I think it was almost like 15% of all conversation was only about it. If even at that time there was a lot of other topics to remember, but a lot of crazy also meme coins discussions, and of course Ethereum as next. And then this is now comes important pattern: price push one time. In this case, sometimes push two times, but the dominance start diversion. In this case, it was very strong. Of course, at the moment when price pushes, you don't see it yet. But if you take like 1 day after ETF announcement, for instance, you're in this period of time, you would have seen the price pushed, dominance could not follow anymore, actually start decreasing. It's a very dangerous zone. Yeah. So this is a moment. Depends if you exit or you start applying more behavior analytic, or even as simple as you say, okay, what is a support line, like somewhere here. This is a moment where market is ripe for correcting all the previous moves. Because, why? From behavior point of view, price pushes up, but there is no power, power anymore in the market. It's overheated. Conversation is going down. Sometimes you will see it in ideal cases, both on social dominance, on trading volume, daily active addresses. It's actually my favorite pattern for spotting the tops. There is even more advanced version of it, but as simple as tracking social dominance for coin, or for narrative which is relevant for coin, in this case for Bitcoin, or actually for the whole market, ETF will pull the whole market, it's crucial. And that was the reason, because we reached the peak of crowd attention and heat before, and it started declining. Every time you got some heat, like now me by in Asia, you need to cool down. Same, nothing goes all the time in one direction, it goes up and down. It's time, and when it's going down, the price will follow. As I say, sometimes it makes, there is a specific pattern where it makes like one more time up, but not so frequent. Mostly just one last breath. If it's so sharp, mostly it's one time, and that's it. It's correct. If it's just cringing a little bit up, it can take a bit longer time, but one last sharp, that's it. So from behavior point of view, based on metrics we know, on knowledge and experience, I highly recommend to use. And we will link after the stream is over exactly how to get to this chart, specific chart, this ETF, and you can experiment with either your coins or other narratives too. This is one thing. Yeah. Now, after the market did correct quite nicely, you can say quite nicely, is it time to buy? Here, the opinions in our team split. I do believe there is a chance, at least for Ethereum, to grow. Less for Bitcoin or Solana. I'm mostly tracking this at the moment, but it's a high risk game. If you wanna, and it's based on some specific patterns I'm observing, which will probably not go into discussion today. But if you wanna risk as risk-free as possible, you know there is nothing risk-free, but as risk-free as possible. There is another few specific setups or chat setups we have, and they're related to what is the market conditions for the proper, or let's say correct bottom. Just now we started with ETFs as a narrative and how it diverges. The correct setup for the top. So for the bottom is typically a good level of liquidations. Yeah. On decentralized protocols, because market always try to impact the maximum level of pain. It sounds maybe irrational, ridiculous, or non-rational, but that's what market does. If you stay in the market for 1 or 2 years, you will experience markets always trying to impact on you the maximum level of pain, regardless what you do. If you hold and you bought at a good level and you need to hold it a long time, you're suffering, you want to sell. It's never a happy moment. And if it's happy moment, the pain will come very soon, because happy moment is most of the time when you buy it and it's at the top. So market is here to punish and pain. And this pain is specific at the bottom where position gets liquidated. There is also like spike in age consumed. People start moving coins because they don't believe anymore. But this age consumed quite often related to the big bottoms, which you have every year or every second years. But even on temporal bottoms, which let's hope this is the case now. And then you will see spikes in our liquidations. We have a few of them here. You can say all repayments increases level of repayments because people sense it's a risky market. Let me repay my debt because I have a chance, because market will go down more and I will be liquidated. And so I want to repay my debt. So there's this clusters of repayment, then they get lower, or those spikes of repayment. Or I will be a bit careful. You need to always to observe new debt and repayment. Sometimes as well as flash loans. Still, kind of when you look on the chart and it's keeps spiking constantly, it means market is nervous and not sure should I keep my position or should I repay my debt. And it's then it disappears. Yeah, once the let's say perceived problem relieved, market already moved enough. It will go away. But the moment you start seeing, if we would start seeing the next few days a very intensive hour repayment, okay, it means those who took the debt position, they try to repay it back. And there is another one, the same for compound, similar approach, compound liquidations, active liquidations, always good. Especially this heavy, we had some unlucky one who probably was over leveraged, convinced that the market will go now. It was the first attempt to break to 5 or to 4 even at the time, didn't work. Someone got over leverage, liquidated. Yeah, very good. So eventually we found the bottom, we went up. So this is sharing. The links will be at the end of all once we publish the stream. And as my time, as I said, a bit limited due to late night here. Okay, not late night, but like evening time. And I wanted to personally share these things we observe and we pay attention and we use on daily, not because it's you. In case of narrative, you build it up and you wait the moment you start seeing divergence. It might take some time. The same for liquidations. Now is the time to observe liquidations. But when the market grows, you don't check it daily. There is no liquidations or not so many on a growing market. Okay, with these two things, I hope I could contribute to knowledge sharing and some insights into how market can be analyzed from behavior point of view.
Yeah, this was great, Maxim. Thank you for sharing. I think there's a lot of very in-depth things we need to keep an eye on as we go through the 5-wave cycle. We go through the ups and downs of sentiment, and you went through a lot of steps there. So I think myself and the viewers, we're definitely going to keep an eye on some of the things you shared, and I've got plenty more that I think will supplement what you just pointed out there. So if you have to take off now, please enjoy the weekend, and I will transition in now.
Well, thank you, Brian. Thank you, Brian. Yeah, we'll take some rest here. And maybe I will hang for a short time, listen, but eventually I will drop off here.
Absolutely. All right, so Max, you should be able to see my screen. Don't say anything if that's the case. In case there's an issue, chime in and let me know. So as I usually do when I start off these calls, I like to look at the price changes and social changes that we've seen over the past week. And there's a few big things that stand out to me right away. You can see Bitcoin and Ethereum over the past 7 days, big drop off. Not a surprise there because Bitcoin and Ethereum, especially Bitcoin, saw a huge jump in discussion rate as the ETFs were, of course, approved. It's now been 9 days since that's happened, back on January 10th. And pretty much after the hype died down on January 11th, going into that past weekend, we've seen more and more attention go into altcoins because, of course, it's funny. It feels like it's been 3 or 4 weeks, but it's only been less than a week and a half. Altcoins were the ones that really had that huge jump right after the 11 Bitcoin ETFs were approved. So naturally, a lot of discussions went immediately over to the chain links out there that had a big jump. To name a few others, I know Chili's had a big run, and just in general, almost all of the altcoins saw an initial spike, and now over the past, I'd say 3 to 5 days, we've seen some big declines all of a sudden. If we look at some of these specifics, Bitcoin has now dropped 10% over the past week, actually about 17% overall since the peak price of about 49 I think it was 48.9K. And now it's sitting, the exact price as of right now is 41,045. It was just below 41, and it's seeing a very minor bounce as we speak. But still, we're looking at a at least double-digit percentage drop, especially since the peak. But just over the past week alone, 10%. Ethereum down 8%. Ion, interestingly, is one of the few that's doing well, up 48% over the past week. Other actual gainers was Celestia up about 8% and BitTensor up about 5%. But pretty much everything else, I see Tron up just barely, Chainlink up just barely. Everything else on this top 100 list is down pretty significantly. We see Cardano here down 15%, Polkadot 16%, Matic 16%, Optimism a big retrace down 24%. I know it was doing really well the past 2 to 4 weeks. Near down 19%, Arbitrum down 22%, Bitcoin SV, which had a big run a couple weeks ago, now down 22%, the Graph down 21%. Lots of big drops, and you can see just in the last 7 days, it was actually at about minus 7.5% yesterday. Now it looks a little better in terms of the entire screener market cap that we cover, and the screener volume is down about 27%. It was actually down closer to 40% when you looked at the 7-day span yesterday. So clearly, the volume has dried up pretty big since the ETF hype was happening a week ago today. It was already starting to decline when we were discussing the initial reactions on our This Week in Crypto stream last week. So looking at the social volumes, big drop off in Bitcoin and Ethereum discussion. I think a lot of people are a little shell shocked, to be honest. We talked about it. You can watch the replay of last week's stream. We talked about how they're, in our opinions, based on the crowd's reactions and expectations and, euphoria surrounding the ETF approvals, there was likely going to be some sort of buy the rumor, sell the news effect. We didn't know just how big it would be, how long it would last, but it seemed like the most likely outcome because that was the least expected outcome, according to what the mainstream crowd was kind of exhibiting in terms of their expectations. So here we are. It's now 9 days later from the ETF approval dates, and it's a little bit of, I'd say a bit of disappointment going around that I think hasn't changed yet. I think if anything, we're seeing frustration, we're seeing disappointment, and the question is how much. Is it to the point where there is straight up FUD going on and people no longer believe in crypto? Well, I don't think so. If we go over to our most recent post here, we'll look at a few of the big social trends happening right now. Starting with just the overall amount of discussion, you can see this is why I love Santiment's metrics so much in terms of leading property and kind of foreshadowing the upcoming market conditions. You see here the social dominance peaked. This was actually January 11th, a little under 24 hours after the ETF announcements. It was only like maybe 4 to 6 hours after. That's when we had this huge spike. And then around midnight, my time, 8 a.m. UTC or so, that's when we got the big spike all the way up to 48.9K. And then since that time, price went way down. And you can see the ETF euphoria, especially right here. This was the early morning hours in the US. We just saw the ETF discussions just drop off a cliff as we turned to the weekend here. That's where it just got back to basically before the same rate as before the ETFs were announced. So clearly the ETF discussions have cooled off as expected. I didn't think it would be to this extent, to be honest. I thought it would be a little more of a gradual drop off rather than just, falling off a cliff like it did. And then we made another post about the ETF effect from yesterday, This was just the gradual decline that we saw. Check out the percentage of profit as well. Bitcoin, Ethereum, and XRP all have their percentage of total supply. So as the coins come into existence from minting, are those coins at a price higher than when they first existed or lower than when they first existed? If it's higher, then it at basically the higher it is, I should say, the more danger that the network is likely in. Because from what I have seen and just done a simple back test on, it ranges anywhere between 55% to 75% for an asset that's been around more than about 5 years. And when it's above that, this red line is roughly around the 75% area. That's when we typically see corrections. You can see even when, Bitcoin in red here just eked above that dashed line, that's when we saw a local top and prices fell down. It's certainly not an exact science, but basically the higher that the supply is above around that 70 to 75% range, the more risk we start to see in prices seeing a correction. We saw plenty of times where there was a bit of a fake out going back to or I should say, August or September of 2021. We had that minor drop. Bitcoin fell below 75%, and then we took off again for one big all-time high way back in November of 2021. And it's interesting looking back on this because we didn't even have this metric until just a couple months ago. We linked an actual article about this metric when it came out a couple months ago. But overall, we're still in a danger zone for these three assets, and you can look it up for hundreds of other assets, actually, especially if it's in the ERC20. That's where you'll see full history of this kind of metric. But I think we're still in a bit of a danger area. It works sort of similar to MVRV. And if you see the market value to realized value, where average trading returns are way above normal, way above 0%, that's where you start to see risks of corrections. And if this is also above 75%, that just adds to the argument that we're still looking like we're in a bit of a bearish divergence right now. So my opinion hasn't changed. I still think we're in a bit of a worrisome area. I think going below 40K looks pretty likely. This is not investment advice. Things can change on a dime if a big whale injects, a lot of new money, or, some, MicroStrategy announces another big buy. There could be a lot of different factors that change the landscape in a heartbeat. But as it stands right now, there's a lot more concerns to me than there are great signs for the immediate future. Now, you don't want to conflate the short term versus the long term. For the short term, yeah, there's some red flags, and we'll show some others here in a moment. But long term wise, we still just had an ETF or 11 ETFs, I should say, be approved less than a week and a half ago. And this was the expected outcome, I think, in hindsight. And we were saying this as it happened to give ourselves some credit. The prices were getting pretty baked in there. I think the main reason, many people may have different opinions, but the main reason, in my opinion, and a lot of our team's opinion, is the October through December pumps that were going on were due to the crowd believing that the ETFs were an inevitability and there was going to be all this new exposure for non-crypto owners to get into crypto, thus injecting more capital into the markets, which is, of course, a bullish event. That is something that objectively is good for crypto. More people owning and trading crypto is absolutely a good thing for future prices. That is what you want to see: more utility on the networks, not just for Bitcoin, but for Ethereum or any small altcoin out there. More market cap going into the sector, whether it's new money from non-investors or current equity investors who are moving their money from equities into crypto. Objectively good. right? So now that that has happened, which was the expected outcome for most people, the question is, why aren't prices just booming to 50K and beyond for Bitcoin and 3,000 beyond for Ethereum? Well, it's basically because markets were being treated as though that was already going to happen. So the effect that we've talked about many times, and you've probably heard about, buy the rumor, sell the news, it's a very real thing. We saw it with the Ethereum merge about a little under a year and a half ago, September of 2022. Everyone was scooping up Ethereum going into the merge. Then the merge happened. People celebrated that it was successful and went as expected without any hitches. And then the prices fell like 20%. And then we had the Litecoin halving, which was last summer. And a similar effect happened where Litecoin was kind of pumping into the final few weeks of that merge. And then Litecoin ended up being one of the worst performing altcoins among notable assets the rest of 2023. This is a very normal phenomenon because everyone anticipates the event to happen and what the price is going to be and the effect that the event is going to have on those prices. They basically make those prices come to fruition before the event actually occurs, and then the event occurs and there's nothing left to really celebrate because it's the expected outcome. So people get so hyped and so euphoric that the effect happens prior to the actual event taking place. And this is really important to remember in terms of investing. You're not just investing in terms of the value of an asset before versus after some bullish event comes true. You're investing in what you believe other powerful traders and where the capital is going to go into the asset. If you believe that others believe that an event is bullish and that others believe that event is absolutely going to go well and without any hitches, then you want to be investing at that initial point of when the event is being announced to be happening, rather than wait for that moment and then, you know, when the clock hits midnight or whatever, you then buy in, right? Because everyone else is doing the same thing and anticipating that a bullish event is going to happen. And if the crowd believes that, you know, there's a 90% chance, I'm just pulling that number out of thin air. If they believe there's a 90% chance of ETFs coming to fruition and being approved by the SEC, which is exactly what happened, then you want to buy when that crowd believes there's a 90% chance, not when the event happens and there's, you know, a definitive conclusion to the event happening. So I'm not going to go any more deep to the psychology behind investing, but I want to point out that any investment you make, especially in a speculative sector like crypto, you're doing so based on how strong you believe the crowd's opinion is of the thing you're investing in, not just your own opinion of the value. You're placing your bets based on the crowd's expectation of how strong the investment is. So I'll leave it at that, but maybe I'll make another independent video about this because I'm pretty passionate about it, and I think it's important to remember, you know, why we invest in something like crypto, and why prices actually are moving up and down. Because a lot of people are shocked when an event happens that's supposed to be good, and then bad price outcomes happen. And once you kind of click into the psychology behind it, it makes a lot more sense. All right, so that said, let's actually look at a few more posts because there were some other important ones. In terms of some altcoins, remember that there's a big difference in how network growth is taking effect since the ETFs happened. we pointed out here on Wednesday, a week after the ETFs, that assets like Ethereum name service, and Threshold were absolutely thriving, while Engine, Basic Attention Token, and ApeCoin were dropping like flies. This is important to remember. You want to be investing in those assets that are seeing consistent growth in their amount of new addresses being created, and being cautious of those that don't really seem to be having a lot of utility at all. On a short-term scale, let's say you see a really sudden spike of network growth as the prices are rising. That's a different scenario, because then it's pretty obvious that you have a bunch of novice traders jumping into an asset because they just saw the coin's value go up 20% in 2 days or something like that. And that's where you typically see a local top. So it's important to differentiate, something like Ethereum here in red, which undoubtedly is climbing gradually over time in terms of its new addresses created, versus something like ENS, which has been one of the hottest assets on the market in terms of price performance. And it sees, this sudden rise. I haven't checked ENS, but I would be 95% confident that it's seen a bit of a retrace since this network growth spike over the past week. Let's take a look really quick just to see if I'm right. I really have not checked prior to this. Yeah, so exactly right on January 13th or so, in the middle of that week, looking at the network growth to see when the exact spike was. What do you know? So the big spike happened on January 11th. We saw a couple more legs up, and then this huge retrace happened. So this was clearly caused by FOMO. It happened, the day after we saw this big surge. Prices had gone up between the 3rd and the 10th, just going in the middle of this day. Yeah, 127%. So a massive pump happened. We see a huge amount of new addresses created, which undoubtedly were mostly really small addresses from, novice crypto traders who want to go along for the ride. They get excited for a day or two, and then they get super punished right here. So just remember that that's an important factor in crypto, is not jumping into the latest crowd euphoric asset out there. You want to be looking for ones that the crowd maybe hasn't discovered yet, preferably hasn't seen a big pump yet. But if you are trying to jump in on a coin that is seeing a big pump, you're going to have better success in one that the rest of the mainstream audience isn't talking about yet. Okay. There's one other. Make sure to check out this video, by the way. I had a lot of fun making this one about the biggest Bitcoin transaction day, which happened back on Tuesday. We saw $665.3 million transaction occur. And this was the largest we had seen since July of last year. And it wasn't just this one. If you look, we highlight 3 different transactions, which this is basically all of January up until January 16th. And 3 of the top 4 largest transactions all occurred that day. And this was essentially right around the top. If we look, yeah, so just looking over the past week, you can see there was the big local top on the 12th. This was kind of the end of the ETF euphoria. Then we saw prices start to climb a little bit. And then right after those big transactions is where we really dropped off even further. Since right around the time the whale transactions took place, Bitcoin has dropped another 6.2%. I don't believe that's a coincidence. I think that the whales likely were taking profit. And we can explore some of the on-chain analytics now and look at just how likely this was a direct cause by some of those big transactions. So looking at transaction volume here, clearly we had a couple different waves going back to January 12th. This was right after the dip. It looks like there was a lot of people anticipating that this was the time to scoop up Bitcoin at a cheaper price. And so far, they've been wrong because we've obviously gone lower. We saw a few more instances, another buy the dip spike right here that happened less than 24 hours ago. And if we look at active addresses in circulation, the amount of unique addresses interacting on the network has actually been very disappointing. The average on a 30-day scale is around 900, about 900,000 active addresses, as opposed to, when we were really ramping into that bull cycle in late November, we saw a little over 1 million active addresses per day. On the circulation end, however, things do look significantly better. The amount of unique coins, so basically each coin is counted only once per day, even if it's moved around 20 times. We've still seen some pretty good days in terms of movement there, with about 179,000 moved on January 16th. This was the day of those big whale moves, the largest since last July. And if we look at the NVT model, yeah, we actually see a semi-bullish candle indicating that we are getting enough, arguably even more circulation than we need to justify the current market caps that we sit in, which is a great sign. Granted, this is a very long-term indicator. We saw that prices were already starting to rebound, even when circulation looked poor. But now that it looks significantly better, we could see performances like we saw back in 2020 when the candles first turned semi-bullish here. Just note that it can go either way. This is not the best correlative metric with price, but it is kind of a justifier. If we're in a bit of a bull run and you see that candles are green or yellow green, generally that increases the probability of prices continuing to go up. Other metrics to keep an eye on: average trading returns. 30-day average traders are actually back in the red, which is a good sign. That means if you added to your positions now or open a new position, know that the average trade over the past 30 days is down 5.6%. Great to see. On the 365-day end, though, the long-term trend still shows that there's a lot of profit that traders have had. Ideally, if we go back, the last 5 years or so to 2019, best times to buy are very clearly when both the short term on the 30-day and long term on the 365-day, the MVRVs are both well into the negatives. So, for example, June of 2021, we saw they both dipped into the negative, prices soared. All the way from May through November, prices were bottoming out during this time, and prices ended up soaring. These are the times that are ideal. Look at going all the way back to Black Thursday. Look at how the MVRV for 30-day was negative 24%. The MVRV for 365-day was negative 37%. And yeah, you would have, over the next, basically till the end of the year or so, Bitcoin went up 612%. I think a lot of people would love to go back in time and scoop up all the Bitcoin they could back here. So keep in mind when you're looking at prices and you're trying to remember to buy low and sell high, but you actually don't know what a low versus a high is. That's the complicated part. Remember that you can look at MVRV as a great resource. And right now on the 30-day end, the short term, there's an argument that we might see a bounce because the short term indicates we're at a low, but the long term still shows we're high. So this kind of, if you blend those together, it's kind of painting a picture of us being in a neutral territory, and things can go either way. If you want to wait until the 365-day MVRV gets a little lower, gets close to 0%, I don't blame you whatsoever. Those are the ideal times to buy, like I said, when they're both below. But anything can happen when you've got one above zero and one below zero, and that's where we're sitting right now. Funding rate. Let's zoom back into the last 3 months. We actually just saw a short bar pop up, and this is on BitMEX's end. So this is interesting. So BitMEX doesn't see a short ratio on Bitcoin very often over the past 3 months, as you see. You can see when tops occur right there. That's when a lot of people are longing compared to shorting. So that means longs are actually paying the shorts in order to go long and leverage and margin their longs. And that's where tops tend to occur. This is basically like people being euphoric and actually putting their money where their mouth is. So regardless of what they're saying on Twitter, you can see the ratio of how much people are longing versus shorting. And generally prices go up when there's a lot of shorts happening. You can see a little bit of that here. And now, right, I think people are at their most bearish since the ETF approvals or shortly afterwards. So this is a good sign that adds to the argument that we're in a potential for a short-term bounce, at least until these shorts go away. Just understand it's not a major short yet. These are pretty mild ratios going on right now. Whale transactions, we mentioned January 16th. You can clearly see there was a bump on the 16th and 17th here. So I do believe that these were related to some profit takes, and we'll look at the supply distribution in just a moment to verify that. But it does appear as though there were some pretty heavy profit takes, and large key stakeholders were deciding that they don't want to risk holding on to their Bitcoin less than a week after the ETFs were approved at that point. Okay, so now let's look at the actual supply tiers and see whether those sharks and whales were accumulating or dumping over the past week while all of the strong opinions were being let out about where Bitcoin was going to go next. So the percentage of Bitcoin held by 10 to 10,000 BTC wallets, I need to refresh that. There we go. Definitely going down, and going down pretty swiftly. So if you're looking for a leading indicator, look right here. I mean, since the ETFs were approved on the 10th, they were holding 66.56%. Now they're down to 66.35%. That's actually a pretty massive drop in just 9 days. On top of that, Tether, the actual buying power of these sharks and whales, has really dropped off. Going back to November 24th, about 2 months ago, the sharks and whales hold about 3.16% less Tether of the available Tether in their wallets. Going back to December 11th, the past 5 weeks or so, they hold 2.9% less of the supply of USD coin. So all three of these key coins are going down right now when we'd like to see them going up, assuming you're bullish on crypto. So makes total sense to me that Bitcoin has been declining as these large stakeholders for the key coins in crypto have dumped and decided to hold less and less over time. I'd be very concerned about this. Now, perhaps we've already seen the dump to justify, the less coin, the smaller amount of coins that these key stakeholders are holding. But we might be in for a little more bleeding if we see that, going into the weekend, these lines continue to go down and not up. So watch very carefully. We're seeing some arguments that a bounce can happen here, but it might be a very small one if the sharks and whales aren't involved in injecting some capital back in at the 40K level, which Bitcoin is very close to approaching. Other things I want to look at: social dominance, as expected, a lot less discussion related to Bitcoin now compared to, when everyone was at peak hype here. This was the euphoric spike right here where everyone was talking about Bitcoin ETFs. We see just about 12, maybe 10 to 12 hours later is when we had that 48.9K top, and then that big 17% drop in price ever since. So it's actually this, to me, this isn't really a concern. It just means that Bitcoin's talk is back to neutral. If anything, in this particular situation, less talk about Bitcoin might be good because it means the ETF is now kind of a foregone conclusion. People aren't focused or hyper focused on it like they were last week. So maybe the FOMO has finally dropped down and people are exploring other assets again at a healthy rate, while Bitcoin is still being discussed at a level that's justified. Other things, take a look at percent of supply, percent of total supply in profit. We'll just put it on this last chart here. So as I mentioned, we were up at like 82, 83% just a couple days ago. Now it's down to 80% for Bitcoin supply and profit. That's a good sign. We're getting close to that 75% mark that justifies we could actually be in for a rise once again, or at least there's less risk. Last time we saw that was late October here. And obviously we know what happened if you bought in while the percent of total supply was below 75%. You would have made a heck of a lot of returns on your investment. So good to see there. I would imagine that Ethereum and XRP are looking pretty similar. Let me see if I can pull up the template I just made. Let's just we'll keep it simple, look at BTC, Ethereum, and XRP, put them on a shared axis. Yeah, so you can see all three have declined just slightly. They're still all above 80%, just barely. Ethereum still looks the most concerning because it's up 83% or 83% of its supplies in profit. It has performed very well versus Bitcoin. If we look at just the price of ETH compared to Bitcoin, yeah, I mean, that orange line tells you everything you need to know. Look at what happened since the ETF announcement, or the day before, technically. But this was the bottom here on January 9th. And Ethereum's price versus Bitcoin is plus 25%. That's a massive gain and something we haven't seen for a long time for Ethereum. The last time we saw something similar, we saw it in a very small way here in early November, where it spiked about 11%. But yeah, a plus 25% jump doesn't happen often. We saw the big one back in July of 2022, where at its peak, Ethereum went up 58% versus Bitcoin. But eventually, I mean, it really dropped down ever since. And even now, since September of 2022, Ethereum's price versus Bitcoin is down 28%. So we'll see if it starts to play catch up here. I don't think it can unless Bitcoin maintains its level of around 40K, 45K. But that's just my opinion. I think if Bitcoin really starts to struggle to stay afloat, then all coins are really going to start to give up some of its gains that it has seen since October. Remember that altcoins are still up significantly since that bull rally started about 3 months ago. So there's some risk if you're holding a lot of non-Bitcoin, non-stable coin assets right now. Quick look at the activity matrix, and then we'll open it up to some questions here. Let me take a quick drink. So looking at some of the hot networks here that are happening right now, there's still always going to be some anomalies, even when prices have declined. And our leaderboard here indicates that we have several that are still showing some major price changes. UMA has been the big story over the past week, actually, up 81%. It's on our leaderboard here among the ERC20s that we track on this model, and 33% just in the past day. you can see it's having a huge active address and network growth spike, and even whale transaction spike. On the surface, that sounds great, but actually, when you see a price pumping like you are for UMA, followed by these three metrics, suddenly seeing its biggest day over the past 3 months for the asset, that is typically a very bearish signal. Now, to UMA's bullish argument, it's actually seeing a ton of coins moving off of exchanges right now. That's why it's here as a rank 1 as opposed to like a rank 90, because it's ranked by how much outflow it has versus inflow. So if it was seeing a bunch of coins moving to exchanges, that's a bad thing, and it would be among these bottom dwellers instead of these top celebrators here. So if we look at UMA really quick, look at that daily active address spike. We'll add network growth to it just to confirm that the model is telling us the truth. And we'll just make that area, and we'll make this area take off circulation for a moment. Make sure they're different colors. Yeah, so just as the model tells us, unbelievably huge spike in daily active addresses and network growth. 2 days ago, it's 108 active addresses and 15 new addresses, respectively. As of today, it's already at 957 and 397. So just absurd surges, which tell me that there's an unbelievable amount of FOMO going on right now. That to me is a pretty clear top signal. We may not see it right away. Sometimes it takes a few hours or even a few days. But if you're looking to short, you know, there are worse arguments than UMA right now because of the amount of crowd hype going into it. You can see volume is through the roof. If we added social dominance, this is the key one here. If the crowd is really talking about UMA now, watch out for a very quick correction, at least until the crowd gets negative on it again. Yep, so social dominance is at its highest level, going back to, yeah, this is the highest social dominance in the last 3 years. I can't remember when UMA first started publicly trading. Looks like somewhere around here, late 2018. This is the highest social dominance spike we've seen since February of 2021. So we're looking at about a 3-year high in discussion rate right now. And we see what happened when that happened. That was the all-time high for UMA. Everyone got hyped about it after it looks like it 3x'd or so. And then there was one final attempt to jump up, and then everyone got punished. So not investment advice. I'm not going to tell you that's exactly what's going to happen to UMA this time around. You know, if Bitcoin surges all of a sudden, UMA could still benefit, especially if the crowd starts looking elsewhere while UMA's price is still high. But if UMA is still getting the lion's share of attention and the rest of crypto is struggling, these are primary top signals right here. So keep that in mind. A few other things to look at on the activity matrix: Rocket Pool and Phantom and Optimism and even Ethereum. Well, be careful of Ethereum because these are often involving bridge wallets and staking addresses. So they're a little bit of an anomaly. But the other assets you see on this list, they're seeing a heavy amount of accumulation for $100,000 to $1 million wallets. Ones that are seeing a lot of dumping from these key sharks and whales include Chili's, which was on a big run earlier this week and now has been dumping pretty aggressively, Loopring, Dojal on Mars, Loom, and a few others here. You can see them yourself. Exchange flow. Good to see that Ethereum is seeing a lot of coins moving off exchanges. That's still very relevant, even with the bridge wallets and staking wallet complications involving that network. mean dollar invested age, Optimism and Woo Trade are seeing, and Stargate are seeing a lot of dormant activity, which is pushing their average age of investments down, which is a good long-term sign. The age consumed spikes are very similar. So I would keep an eye on this activity matrix model. Perhaps Gary or Balresh could link the model to copy if you're interested in using your Sandbase Pro API to check this out on a daily basis yourself. It's a very useful model, and you can, of course, enjoy this view, which shows, from dark blue to bright red, how cold or hot the respective network is for about 115 different assets. All right, if there is one or two asset requests, we do have time for it, so feel free to fire away, Balresh.
We only got one that we have on Soundbase, and it's not in ERC20, but maybe we can look at some social stuff.
Sure.
That would be ONDO, ONDO.
I have literally never heard of this asset, but that's fine by me. I love looking at projects I've never explored before. Let's check it out. ONDO. It is the 2,265th ranked asset in crypto. So not surprising that it hasn't been on our radar before. Let's give it a quick refresh so we can get the main template up. Weird. I hope I didn't reset the main template. We'll just add on the metrics for now. Oh, is this a brand new asset? Did it just come out? Yeah, it looks like this is less than 24 hours old. So this is going to be pretty tough to analyze. Yeah, we've got, well, we'll try to make this as zoomed out as we can here. The price is obviously off to a quick start. Let's look at Ondo's news. It must have just been added to some exchange. I don't know if it's, yeah, it's not Coinbase or Binance, but it looks like KuCoin has Ondo trading. So that's probably where it's getting the majority of its volume right now. They're the only really, I guess Gate and Bybit are somewhat large, but KuCoin is the largest by far on this list where it's actually listed. But it is interesting to see that if it really has only existed in public trading for less than 24 hours, I'm surprised it's already on 10 exchanges all of a sudden. I wonder if we just added it and we're going off of like maybe KuCoin's data when it's already existed for a few weeks before that. Feel free to chime in, the person who requested it, because you know more than we do. And I don't want to waste time reading about it at the moment. But yeah, we can see volume peaked here about 4 hours ago, and it's been dropping since. That's not necessarily a top signal because the price was not peaking at that time either. It had already retraced a bit. And of course, it jumped again just in the last hour. So currently it's at a price of about 21.5 cents. It was sitting at 9.26 cents. So just since it got publicly listed, it's up 132% according to our data, if this really was the initial time that it was listed. We don't have social dominance yet because it's literally just fresh off the presses right now. So just curious if it does show social volume. No, it doesn't give us total amount of holders or total supply and profit. Let's see, just looking for any metrics that might pop up. Yeah, it's just too new. Yeah, sorry. I wish I could give you guys more info about it, but it is too new. Yeah, it doesn't even have RSI yet. So we'll leave it at that. It's okay. I guess there's an article here. It reached over $1 billion in market cap in one day. That's quite interesting to see. The third largest real world asset project with nearly $200 million of tokenized securities issued new tokens today. It unlocked 14.3%. It's getting paywalled now. I could move the pop-up. That's good. 14% of its native ONDO tokens, with the token's market cap soaring to 1.66 billion, according to Dex Screener. Yeah, it looks like there could be some promise here. If it's got an actual purpose in the blockchain, like being a real-world asset, that could potentially allow it to play some catch-up along with some of the other leading real-world assets out there. I think we have a watch list for real-world. It's not showing up on our watch list right now. If you happen to have it, feel free to link it, Balrush, but that's okay if you don't. But yeah, I think it's let's see how the social volume plays out going into the weekend. This could probably give us something, because instead of going through the actual asset, we could look at the actual overall. Okay, here we go. So we got something we can actually look at, and it's been talked about going back to October at least. Let's see how far back we get the first. Yeah, so there were even some very minor mentions of it, probably while it was in development, and a few people had been hearing about it. But in terms of its actual publicly traded price, that didn't start until yesterday. Looking at the last week only. Yeah, so it looks like there's some very, very early signs of social dominance peaking and then the price going down. It's now not being talked about as much anymore. So there could be an argument for prices to rise there. I think this is really cool educational discussion about a brand new asset and how it tends to jump out of the gates. If there's a ton of hype, that's where prices will correct, but it looks like the hype has died down for now, which would increase the likelihood of it continuing to get more and more discussion throughout the day and going into the weekend. So I think this is the key chart right here. I'm just going to drop it in the chat myself for any of you to look at. Here we go. Oh, thank you. It's in trending words at the moment. That's good to know. So it is seeing a significant amount of discussion, but check out that link, and you can track it going into the weekend to see if the social dominance is continuing to rise. Just know that if a brand new token is trending, it's likely because it had almost no discussion at all, and any tiny uptick in discussion means it's going to hit the trending list because of just the percentage gain of going from 2 discussions per day up to 9, right? Because that's still like a 4.5x compared to its normal resting rate. And this is all by percentage gain in terms of increases in discussion. But here's your top 10 list. ICE, ONDO, Monta, which was trending a few days ago, or surging a few days ago, I should say. UMA, which is surging right now. Bitcoin and Ethereum, of course, still off of the ETF news from a little over a week ago. Binance Coin has been doing pretty well. Honey, and then Whale and Stellar. Interesting that Stellar is trending because the price has been really falling off a cliff lately. But this looks like it might be related to a disbursement platform. Platform enables efficient and transparent distribution of funds, benefiting organizations, nonprofits, and humanitarian initiatives. It certainly doesn't seem like a bad thing. So perhaps there's some merit to looking more into Stellar on another call here. But Yeah, I think we covered a lot here. I hope Maxim's segment was helpful for you guys. I think there are a lot of possible short-term bounce signs coming up going into the weekend. But I also think we may visit sub 40K here unless something changes pretty quickly. So I hope this was a good call for you guys. Thank you all for your contributions and great questions. I saw lots of chat going on that I don't typically monitor while I stream, but I'm looking forward to having more of these discussions transition over to our Discord channel. Make sure you're hopped over to it if you aren't currently part of it. And make sure to give a subscribe to our YouTube channel so you don't miss out on the next videos we release here over the next week and beyond. So for Maxim and Balresh, who is doing a great job of covering our stream today, I want to wish everyone a wonderful and happy weekend, and we will talk to you next week. Take care, guys.